In today's show, we'll discuss if there is any chance at all for bulls to strike back to get prices higher, and if so, what would be the reason for that? Why has crypto and Bitcoin been going down? What are the risk factors when it comes to MicroStrategy, and is it something that you should start to panic about, right? We'll discuss that and a whole lot more today. Smash the like button. Let's get straight into the show content. Most of the coins down. Zcash, one of the biggest losers, which is absolutely beautiful since we're in a massive short trade over there, and it's paying huge dividends. So great trade over there. All of that's going super well. We also took the SERP trade. We'll have a look at that. We're in the MicroStrategy short trade. We'll have a look at that as well. Yesterday, I spoke about would I re-enter that short position back in. So I'll update you on that. Stay until the end of the video. And then, of course, we'll scour the list and we'll have a look at, is there any new opportunities, anything else that we can take in terms of a trade? Let's go. Let's get straight into it. And I want to talk about the Bank of Japan right now. A lot of panic coming into the markets as well around that. The Bank of Japan now sees a 76% probability of a rate hike, which is coming on December the 19th, which means what? Does that mean that the markets are going to crash? Remember, when it comes to the Bank of Japan, anytime that they raise interest rates, the whole market panics. And the reason why is because of what's called the cash and carry trade unwinding. It's where they were able to borrow very, very, very cheap money from Japan, and then they're basically rolling that over into higher yield-bearing assets or markets to basically bank the difference. So if the interest rates go up, it means that maybe they have to sell those other assets, which are majority in US markets, US stocks, the S&P 500, etc. And consequently, will that drop price? And what does that mean for Bitcoin? That's what we want to discuss today. Before I get into this a little bit further, what I do want to outline first and foremost is that price is coming into this key pivot level. It has got a little bit of a reaction. If this cash and carry trade unwind thing happens again, where Japan do raise interest rates and it causes another mass move towards the downside, I want you to remember this chart. And we're just going to highlight it super quick over here because we've been through it a few times, but it's just in case there's anyone new here that has missed it, right? Swept the low, price runs up. Swept the low, price runs up. Swept the low. When I say swept the low, I mean price comes down below what seemed like the major low, the swing low. Once you sweep that level, you rally up. You sweep the low, price runs up. And so the story continues. Sweep the low, price goes up. Sweep the low, price goes up. Sweep the low, price goes up. And the question is, will you sweep that low? So if we do see them raise interest rates over there and it causes another stir and panic within the market leading into the third week of December, watch for the sweep of that low, the relief rally and the reclaim. If you get that reclaim back above the $80,496 low, which is where your previous weekly low was, well, that is considered the deviation that activates the long trade. Stop loss goes below, and you can ride that towards the upside. And the only reason that I'm saying this is we don't have too many iterations, but the last time we saw something similar where the Fed, the US Fed, cut interest rates, but the Bank of Japan raised interest rates, it swept the low. Just like that, right? So that was the previous sweep of that low. That was in, I think it was in August 2024. Price rallied towards the upside, courtesy of Benjamin Khan over here. Credit where credit's due. He identified this pattern, and maybe we'll see the same thing again. I bring it up because it lines up with the theory of possibly sweeping that low. So something to pay attention to when you do go into that interest rate decision, which is going to be on the 19th of December. So somewhere before or just after then, you should see that low potentially swept. And if it happens, that becomes an opportunity. Then we also have to talk about MicroStrategy. Their market cap now is worth $10 billion less than their Bitcoin holdings. Not really necessarily a good sign. It was something that we warned of. And if you look at this, this is what the market's narrative around MicroStrategy was just 2 weeks ago versus now. We had 2 weeks ago, MicroStrategy can choose to not pay the preferred dividends. MicroStrategy can just hold Bitcoin through a 90% drop. It's absolutely no problem at all. They've done things like this before. Now, as of yesterday, the internet, of course, is going ballistic around this, which is fine for us because we've been short on this for a long time. And the narrative is that MicroStrategy funding a USD reserve to have runway to pay their obligations will sell Bitcoin below 1x net asset value to achieve that. And basically, the whole market is going crazy, saying it is completely over for MicroStrategy. The Ponzi has collapsed. I'm not here to debate whether it is a Ponzi or not. It doesn't really matter. Well, not if you're a short-term to medium time frame trader or swing trader, but if you're an investor, it probably matters for you. At the end of the day, we have been short. But the question is, what does it matter in terms of when that stock market capitalization drops below the value of all the Bitcoin held? Well, we've seen it before. You can see when it goes red over here. This happened back in February to August 2022. We then saw it again in February 2023. And now we're seeing it again in February. Not February yet, but leading into February, probably 2026, you're going to have a similar pattern over there. So it's not necessarily the end of the world, right? Very, very, very important. Not necessarily the end of the world. It doesn't necessarily mean that MicroStrategy is going to implode. I think that you'll see it in the charts. And at the end of the day, we covered 75% of that take profit zone over there. So covering 75% of the short trade, which we entered all the way up at 305, which means we rode that down in total for about 45 to 46%. Huge profits over there. This was the trade setup, entering all the way at the top here, riding it all the way down. And I was looking to take profit all the way down into this 136 zone, which is what that bot has been doing on Pinex, which is absolutely wonderful. So the question is, am I going to reallocate that in for a bounce? Or should I say for the lack of the bounce, because there's panic coming in? And my answer is no. I think that you're starting to reach peak fear on MicroStrategy within this vicinity over here. And I think there's still a high likelihood that you'll have some sort of relief. That doesn't mean I want to long this. I'm not going to take a long trade. I want to reallocate that 75% profit back into the short trade to continue to ride it down at a later date. So my answer with regards to when to re-enter that, because what if we don't get that? Well, if it continues to hold sideways for a couple more weeks over here, I may just opt to reallocate, because it's going to start to look like a bear flag. Consolidation at lows is inherently very bearish, and it means you should expect that prices will probably drop further down. The last 25% is still on the table, where I was planning to take that profit at $139. So I'll update you on that. But I personally don't really believe that this is a buy. It's a dangerous buy. Just because you think something is going to bounce doesn't mean that you should buy it, because you're in a downtrend, right? But it's been painful, right? Look at that. It's been terribly, terribly painful for anybody that is a MicroStrategy bull. You've effectively dropped 57% from this high, right? Which, it's dropped further since before then. If you're going to go from the all-time high, wait, I have that marked out over here. I think it's already dropped. Here we go. From the all-time high, it's already dropped 71%. So pretty brutal, pretty brutal. So MicroStrategy basically opting to hold, cash so that they can create some runway. That's basically what they're doing. They're getting a US dollar reserve over there, yield bearing. And basically, they're going to use that as runway to survive the bear market. So the question is, how long is the bear market going to last? That's currently the situation for MicroStrategy. Gold, silver, very bullish. Let's quickly go on to gold on the daily time frame. We haven't looked at this for quite some time, but possibility of another big breakout over here, despite those highs being when everybody was lining up to buy physical gold. They started to fight outside the stores over there, and that was a local top signal, but not necessarily the all-time high signal. So far, gold looks bullish. High highs, high lows, potential for continuation. Silver over there also breaking out. So pretty much, if you look at the picture of gold, well, you can imagine gold is probably going to follow along with silver, which has already played out exactly the same pattern. So if you look at silver over here, price comes down, sets a high, sets in a little bit of a slingshot move over here, rallies straight through. So if we have a look at gold, gold puts in a high, pulls back, bounces, sets in a lower high, prepping for potentially the slingshot move through to the top over there. So gold is one to put on your watch list over there if you are looking for quick trades over there. Pretty simple in the sense that you can pretty much just be long with. If you want a tight stop, I'd probably float that stop loss at about 4,134. I wouldn't ape into physical gold personally. I'll just be taking it as a trade, right? On a platform that offers gold trading. If you do want to trade it on Pinex, by the way, you can trade it over there as well. There's a link in the description below for Pinex. Alrighty, moving on. Let's take a quick look at the stock market, and then we'll get into all things crypto. Stock market consolidating above the yellow box. That's what we wanted to see for bullish continuation. So likely to continue on over there. Dow Jones Also, back above its yellow box, that was the level to reclaim. Looking good over there. QQQ, just quick reset over here. Just reclaiming. It's been lagging the S&P 500 and the Dow Jones, but it is starting to reclaim. So same story, probable continuation over here. Anything else to look at that's important over here? Apple, NVIDIA, I think we'll leave these for tomorrow. It's not too important yet. Let's move on. We'll go into the whale trades dashboard over here. We got the skew very, very neutral over here. So lack of liquidity in the market, still sitting at 23 on the fear and greed index. We got liquidations spiked up a little bit, but not too significant, right? It hasn't reached over that $1 billion mark, which just shows that liquidity is moving up. Where's the liquidity going? Well, I think it's pretty obvious that a lot of the liquidity is going back into the stock market and into the metals market, right? That's where you're seeing the liquidity flow. So therefore, if that's where the music's playing, go dance there, right? There is opportunities over there for the trades. We've seen the ETF outflows. That's continuing. Big and very, very, very important chart to look at. Not really a good sign or indication for the bulls is the daily exchange volume. It's dropped those levels. We said we don't want to see that break below 44 billion. That was the message for all of last week. Well, to be honest, I don't care if it breaks below 44 billion. When I say we don't want to, I just naturally assume that most of you are crypto bulls and you don't want to. So breaking below 44 billion is not a good sign. It means liquidity is leaving the market. And therefore, it's very, very, very easy for things to fall through over there. So we'll see what the high impact data is going to be coming out throughout this week. I'll update you on that tomorrow. But the funding rate as well, starting to go negative as of this week. We have to wait for the weekly close. We really want to see some consecutive and deep negative weekly funding rates over here, which would be an indication, especially if we get in alignment with that drop, right? So in an ideal world, you consolidate here, break below, reclaim in alignment with the Bank of Japan raising interest rates on the 19th of December. And it plays out kind of similar to what Benjamin Cowen outlined over here. When the Fed cut rates, Bank of Japan raises rates. We see the drop down. We see the reclaim over there. We see the funding rate go negative. We see the liquidations spike aggressively over $1 billion, $2 billion. Hopefully that's kind of the situation of what you'd see. And that could be the opportunity to print a major bottom. So a very boring price action right now, to be totally honest with you, but there's still trades, which we've been taking, right? We've taken those trades. There's money to be made. Just don't sleep. That's it. Don't sleep. You can sleep 8 hours a day. That's healthy for you, but don't sleep for 24 hours a day. That's all I'm saying. Otherwise, you're going to miss it. If we have a look over here at the liquidations, getting there, 24-hour liquidations, almost above 20 billion. We want that to stack a bit more to become a real draw of liquidity. And then very, very, very important, the USDT dominance still rising, still in an uptrend over there. You had a pretty decent daily close. So, I pose you the question, is this going to reject from here? Well, in order to get any sort of a bounce, you must see this reject over here. If this does continue to grind towards the upside, remember the implications on the weekly time frame, which you're leaning into that fourth time, 1, 2, 3, 4, creating a bullish order block, while Bitcoin creates that bearish order block within that yellow zone, right? Within that yellow circle over there, that could lead to Bitcoin breakdown, breakout in USDT dominance, and then your next target is coming in on the yellow box, 7.8%. That will create a lot of pain. If you do see that, there's no guarantee that you actually sweep and reclaim. You might just go all the way back down to like 70K. I want to be clear. If you do go down to $70,000 for Bitcoin into this pink box, this is a buy zone. This is inevitably, this is going to bounce price. Like you pretty much have to stack orders over there if you want to play that bounce. Inevitably, it's going to bounce. Even if it's a small bounce that just fails at 85K, you will get that bounce. So I'll pose that question to you in the form of a poll. What will happen first for Bitcoin? A weekly candle close above $95,000 or weekly candle close below $75,000. What do you think? Go vote. You just want the juicy low time frame trades, click that one. That's 23% of you. So interesting in terms of where the crowd sentiment is. So you can't deny this. It is a downtrend. Although there is a small possibility for a higher low to form over here on the daily time frame, the trend is your friend. And is this a ranging market or a trending market? That's a big debate, right? You always have to ask yourself that. Ranging market or trending market? Right now, I would rather treat this as a trending market and be cautious and look for lower time frame trigger trades if I were to be going long, yes, this has a potential for a high low, but usually if you want to get long in a trend, you at least want to see consecutive high highs and high lows, which would have to look something like that, which then could also start to look like a bear flag, right? So everything is stacked in the bear's favor and not in the bull's favor, and we're getting compression again between the lower and upper Bollinger Bands. They're squeezing in, which is going to recontract this. You can see that indicator moving towards the downside, squeezing, recontracting in anticipation and preparation for the next move. So we need to get that next move absolutely pinpoint correct. And one way to tell is always going to be that volume, right? This is reiterating how much control the bears have. Price comes down hard, volume on the red side spikes. Bears are in control. Okay, you see that? Price rises, volume on the green side drops. Bears are still in control. It's just corrective in terms of a bounce. Price comes back down, big spike in red volume. Bears are in control. You know, price holding up over here, almost no volume. So watch for those New York opens, right? Lately, we've seen the New York session open and then start to dump price over there. So these are the things we need to be careful of. We also looking at ETH-BTC over here. So ETH-BTC finally leaving the apex. We said we would get some sort of a directional decision over here. And if this is going down, unfortunately, it's most likely, and we highlighted this yesterday, if it's going down, the most likely outcome for why is because Bitcoin price is dropping, but Ethereum price is dropping quicker and harder than what Bitcoin is, which is currently the situation, right? In a bearish controlled market, ETH-BTC is breaking down over here, so there's no real trade opportunities over there. And we have ETH-USD, which, you know, broke back below that key level. You're coming back to the golden pocket over there. So it's not healthy. It doesn't look good, right? You need to give this time to develop. I think before getting long, I would rather wait for something like this on ETH, some reaccumulation over here. You need to see something like that, creating a bit of a rounded bottom. You know, just longing over here with a stop below there is kind of crazy. It's most likely to fail within that candle. So any spike up over here, probably going to reject and come back down. Okay, so you need time to develop this range over here. So Tom Lee, probably not happy camper right now. I think he's like $5.5 billion in the red on his ETH trade, which is unreal. And, you know, even good guys eventually get it wrong. He was one of the good guys. Did very, very well in Litecoin, very well in Bitcoin in the price cycles. I'm not convinced he's going to do too well in here. I think he was buying like near 4K, which is pretty much the top over here on ETH. But he's still spreading that false hopium on CNBC. The poor CNBC viewers are on the way to the slaughterhouse. They believe 12K by the end of December. Not going to happen. Okay, not going to happen. So let's have a look at some of the low time frames. We'll check if there's any other trade opportunities over there. Let me know in the comments if there's something specific that you want to have a look at. For now, what I will do is I'll have a look at some of the short trades that we're in, just see if you need to adjust or change anything over there. We have a Zcash pretty much played out in full. This was just my little screenshot yesterday for the other WhatsApp group that I was in. I had to claim a little bit of clout with those guys because they were all super giga bullish and they're laughing at me when I went short over here. So that was to send to them 175% up. I think I'm like 200% up on that short trade now. And I haven't closed any, by the way. I'm still holding this trade because if Zcash breaks below this level, you know, that's going to get crazy. I would expect, and I did see earlier before the show, one of you guys asked about how high a complacency bounce would go in Zcash. So we can probably mark that out. Let's just actually do that right now. Look, this is theoretically a bounce zone. So if you do put in a bounce over here, I would say that the bounce will probably fail between extreme scenario. You go to the golden pocket. I don't even think that's necessarily going to happen. I'd say like the 0.382 to 0.5 is the most likely outcome, which is going to take you close to our entry on that short trade, which is why you do have to take profit at some point. But I'm going to assess this and monitor this, you know, throughout the day. So I'm going to look for something like this. You know, maybe drop a little bit further, even maybe it goes to like 250. This is just a rough drawing. Don't quote me on this, but I'd be looking for the complacency to be something like that on Zcash, right? And then you're probably going to, I think you go back all the way, full retrace. That's my opinion, okay? It's not financial advice. Do seek your own research and opinions from other people, but that's what I think is the most likely outcome given the exponential rise of parabolas when breaking drop 70 to 90% depending on the coin. So realistically, I would expect full retrace the entire move over time. Not overnight, but over time. So I'm still holding that, right? That's a short trade over there. We'll go into the syrup short trade. All in all, this is looking super good. I think at this point, it's safe to say you can eliminate the risk. So there is no risk on this trade. Move your stops to break even on syrup. It's all good. World Liberty Finance as well. There is a chance it spikes back into here. I think to play it safe, stops to break even. There is a chance that if the rest of the market bounces, World Liberty Finance will spike up back into the zone, and then you can look for continuation. The same trade idea applies. It's just a question of, does this roll over first, or do you get one more spike up to take out a lot of those stops? I would get stopped out. It's fine. I'll get stopped out at break even, no loss over there, and I'll just re-enter if it breaks back down. This is part of life. Like, you're not going to nail it every single time. It's like, playing baseball or cricket. You're not going to hit a 6 or home run on every single shot. So the equivalent of a stop loss is like blocking the ball, right? Or missing the ball in baseball. In cricket, you just block the ball, you hit it, nothing happens. You don't make a run, you don't get any points, but you don't go out, you don't strike out. That's the equivalent of stopping out. Or in baseball, you maybe just miss. It's like strike one, right? You miss 3 strikes and you're out. Well, you'll get it within the 3 strikes, right? You'll hit that home run, or you'll get a run or something. I don't know what you guys call it, where you run to the first base. Anyways, cool. Let's see. What else? What else have we got over here? Okay, I think we covered XMR. Okay, let's go to XMR, which is Monero, because this was one that we said seems like it's brewing for a possibly much, much, much bigger breakout. It's got this huge cup and handle on a weekly time frame. You need to probably get a little bit more precise in terms of your entries. Let's just have a look at that weekly over there. So weekly consolidating, holding up over here. I think that an obvious candle, which is, these are big moves, right? So you got to be really careful over here. These are big moves. Look at that, 18% away. But judging by the weekly time frame, this candle that tried to break things down, I think would be a logical place to have a stop loss just below there. So I think even last week's candle, but it's quite volatile. So I'm going to give a bit more breathing room over here. To establish a long trade, you're going to be better off looking at something like that. There you go. So buying smaller at the top, larger at the bottom down here at the base of the triangle, and hopefully getting a move like that. As soon as you break back above the pink box, 460, this thing's ready to go. And you're talking about, $750 Monero, and it's one of the few bullish charts, hence I pinned it here to the top. I see some of you talking about Fartcoin. We'll get to that in just a minute. Here it is, Aster. I said Aster very, very, very likely to drop between 85 and 88 cents. You've done that, right? Broke that trend line, came all the way back down. It is not in an uptrend, to be clear. This is still a downtrend on all low time frames, lower lows and lower highs. So you need to wait. Either it pulls back, sets in a high low, maybe an opportunity over there if you get back above $1. Otherwise, it's just going to continue to bleed all the way through. Okay, Fartcoin. Let's go to Fartcoin. I feel like maybe something cool is happening on Fartcoin, but probably only on the low time frames if everybody is talking about it. Not even. I mean, it's okay. Maybe you're paying attention to that wick that occurred from yesterday. It's very illiquid, very dangerous. Like, you got to be super calculated. You have to execute things like this, in like a 15-minute time frame. It's just, there's no trade over here for me personally. Like, you're looking on the daily, that looks like a beautiful wick, right? But when you look at it on the 15-minute, this is just a choppy range. It's just range bound, moving all over the place. So I don't really have like, a good trade opportunity on Fartcoin per se. Okay. Alrighty, guys, let me check your comments. I don't know what PIPPIN is, but we'll have a look at it. PIPPIN USDT. Okay, we'll use let's go to the Mexi one, since they always seem to list first. Yeah, huge pump. It's definitely going to steal your money if you hold on to this though. But Yeah, they're pumping it. They're pumping it. It's clearly 100% manipulated and orchestrated. It's very obvious. There it is. It goes up. it's going up for now, but it's probably not going to continue to go up. So you can either jump into the trend, maybe tight stop loss underneath these lows over here, which would be like 1677, and you basically just long and hope for the best. Or you can just wait for confirmed local top. Once the local top forms, you just short it. So that's it. That's the only commentary I have on PIPPIN. It is clearly controlled and manipulated. Like, what even is this? Okay, cool. Alrighty. So let me just focus on some of these other ones. Anything else over here? I just need to see if I had anything else on the watch list. I think the main thing I wanted to bring to your attention for today is what to do with the MicroStrategy trade. What to do with regards to the other short trades that we gave over here, which was Zcash, Syrup, and World Liberty Finance. So Zcash, my answer is still continue to hold the short trade. MicroStrategy, I'm 75% out of the short trade, but considering to put it back in if we consolidate at these lows for a couple more days. Syrup, move your stops to break even. World Liberty Finance, move your stops to break even. That one has the highest probability of stopping out. And then XMR, hedge against those shorts by maybe looking for a long trade over there. That's the plan. So since that's the plan, let's look at XMR and maybe a lower time frame, and we'll focus specifically on our momentum oscillators over here and what's going on to see, is there a chance even to get an entry? Okay. So first and foremost, let's just mark out some of these key levels and see how they all line up. I just want to mark out that low. Let's just see, that low looks interesting. The weekly, does it line up with the same low? Yes, it does. Okay, so we have confirmation on the daily and the weekly. That looks good. Momentum oscillators starting to curl over there on the weekly. 5-day getting a red dot. 3-day, it's okay. Neutral. 2-day, it's also in the middle of nowhere. Neutral, let's just see on the daily. Okay, red dot coming down. So, based off of that, you're going to be looking for pullback opportunities. Let's see the 12-hourly. Okay, 12-hourly. Right. So you got some of these fib levels marked out. Let's see the 8-hour coming down, finding support over there, Monday low. All right, 4-hour. So I like the 50% areas as an area of interest, and we'll go into the hourly. So if you are looking for a trade opportunity, I think this is probably going to be one of the better ones. Highly volatile. But if you can start to see some price action develop around here between 360 and 376, stop loss would be below here. I would start to look for signs of strength within that general area. I'm going to circle it. Within this general area, I'm looking for signs of strength. So maybe even just sweep the Monday low, reclaim. If you do that, I'll immediately enter into the long. Otherwise, you're going to pull back maybe as far as the golden pocket at about $363. 360 becomes the entry point. At first, it starts off as a short-term trade idea, which looks something like this. At first, you're just taking the trade up here. That's almost a 3-to-1. It's a 2.89-to-1. Even if you want to be generous, call it a 2.5-to-1. But the good news is if you can get this part of the trade right and Monero breaks down here, spikes up, and it can break back above, now you can talk about compounding this to those higher targets, which I think we said was, it's not on this chart. Let me just quickly have a look over here at what that level was. XMR, 740. So now that suddenly can compound up to here. 740. If you can get above the pink box. Okay. So it starts off as a low time frame trade. That's what I'm going to be looking at. This is basically the next trade plan. This is the idea. This is the next low time frame trade that we're entering into, and we're hoping that it's going to position as a longer term trade. Maybe it's the money rotating out of Zcash, part of privacy into Monero, and they're going to run this one turbo, create a blow off top just like Zcash, and then it's over, and we'll short that one as well. So that's the plan, right? Okay. Alrighty. The infinity world. What coins would you buy if alt season happens? I don't even think that's a topic for discussion, honestly. Let's just see if they can, even get Bitcoin dominance to break down a bit. I just don't even think that's something to think about. Okay. Alrighty. So Cardano, guys, look, Cardano's wrecked. It's absolutely rinsed. We've been through this list. You can go back to any of the videos from Friday or Saturday. It is absolutely horrendous. It's on its way to 33. Okay, 333. Alrighty. Bull moon should happen soon. So that's an interesting thing to consider as well. Yes, you do have the moon phases, but you have to take the bull moons with a pinch of salt in a downtrend, the same way that you take the bear moons with a pinch of salt in an uptrend. So you take the bear moons more seriously in a downtrend because it's confluent with the trend. The bull moons in a downtrend may just pause price. That's it. Price may just go sideways. It doesn't mean anything actually mega bullish, right, for price. Okay, let's have a look at useless. I will check useless. I know there's a request for that as well. It's useless. Let's have a look. Terrible. Absolutely terrible. It's rejected off of what was key support, and it's probably going all the way down. Like, honestly, all the way back to those lows. It's dead. The trade opportunities over here are just shorts, like basically just short all these things. Only if you see the test, right, into resistance. Like, I'm obviously not advocating you short once it's already down 99%, but if you're getting these spikes and losing these levels, those become easy short trades. For example, if you had entered over here, you could short it there. Good, right? Like 5-to-1 risk to reward ratio pretty much on that. Okay, we'll have a look at ENA. We'll look at Pendle. I know there's requests on those, and these are some that you've been told are fundamentally strong coins, but I'm pretty sure they're down as well. Look at that. Terrible. It's coming down for 19 cents. Pendle also, cleared some of those levels, but what is this? Why do I have this over here? Let me just delete that. Lower lows, lower highs. I would treat Pendle as well as more likely than not to visit the bottom of that trend, which is going to be your parallel channel, low boundary 143. Curve, we can also have a look at. I'm pretty sure same story. It's going to be wrecked. We don't have this one already marked out. Okay, it's fine. Curve, and we'll go to... Let me just try that again, guys. Let's just put in the ticker. Yeah, there we go. Knew I had it. Okay, curve. Terrible. Wrecked. Going back for... Like, they're going to zero. They're basically going to zero. These coins are literally on their way to zero. There's very, very little liquidity in crypto. Don't forget that. And if there's no liquidity, they're just going to bleed and bleed and bleed and bleed. So CryptoTubeAgent says, looks like everyone is trading Arthur's coins. Crazy how few narratives we have left. Yeah, and Arthur Hayes' coins are also going to zero. So, I mean, that's the truth, right? What else do you want me to say? It's the truth. That's why we're trying to stick with the winners. And I'm trying to give you very, 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 very few things. We're mostly in shorts. We have a couple of, not a couple. We have one potential long, which is going to be on Monero, and that's it. That's the only one. Otherwise, we have to look outside of crypto to other markets for other trade opportunities, which we are doing. We just need to be a bit more patient to wait for the perfect entry. Alrighty. It's over for alts, the smaller ones. Yes. I mean, it has been for a while. They just go down. So it's very wishful thinking to think that they'll return. You've got to be super, super careful. This is why I said for all of 2025, literally the whole year, since January, I said, concentrate, concentrate, concentrate. And I always made that joke, not only in your mind, but in your portfolio. Do you guys remember that? I said, concentrate your portfolio. Less and less and less. Hold less than a handful of coins so that you can cut the positions very quickly if and when things go south. Alrighty. Also, guys, there is a incentive over here on BitUnix. I'll just let you know what that is. If you want to get involved, you can get your share of $50,000 and an iPhone 17 Pro, which is very nice, right? You can look at your P&L cards on the new 17 Pro. Use the link in the description below if you do want to join in on that. It's all explained, everything that you need to do over here. So really, really nice incentive. If you're trading anyway, they're pretty legit exchange. Very quick, very fast, very high liquidity over there. And pretty much you can get an iPhone and 50K. Alrighty. We can go to near. Again, unfortunately, it's not going to be looking good. It's not going to be looking good. We can go to near USDT. Here it is. Look at that. It's just terrible. Let's go into the weekly chart so you can see the candles a bit better. Full candle close underneath key support. And yes, your best bet is you're going to be hoping for a deviation. But at this point, there's now a real chance that you're coming for that low at 96. How about silver? Look, you can look for an entry on silver as well. Let's go back to silver. All right. Okay. So the problem is it's already started to move. So you're going to have to look for the local top to be set. But also this thing could just begin to expand. Like in a breakaway market, it's very difficult. All that you can do is use this as your stop loss now. Like basically use risk management, scale into the trade, and place your stop loss at the yellow line, which is going to be about 15, 16% away, which kind of trades like a crypto then, when cryptos do well. So I think like the next best alternative is probably gold, because from, let's quickly do this, and I'll just put these next to each other for you. If we go over here to gold and silver, and we put those next to each other, you can see it's effectively almost exactly the same thing, right? Price comes down, price comes down, price bounces, price bounces, price pulls back, sets in a high-low, price pulls back, sets in a high-low, markup. So maybe this is the better trade to take before the markup. Very, very, very similar price action. Do you see that? Okay, but you got to be super careful, right? Don't get caught bag holding metals, because your recovery time for these things are the rest of your life, probably. If it goes against you, it's like 20 years, guys, like 10, 20 years that you can wait. So I have to be crystal clear, like in my very humble opinion, and I haven't been on earth for 60, 70 years to witness this firsthand, but I can go look at the chart and the candle. In my very humble opinion, do not go all in on metals and get caught bag holding this thing. Like trade it like a normal trade, right? Don't get emotional and think that, I don't know, there's going to be some massive shortage on metal and everybody needs it now all of a sudden. Just take it as a trade and that's it. Okay, cool. So that's that. I see you guys are asking about where to trade these things. Also, you can also trade it, believe it or not, on BitUnix. You can trade gold and silver on BitUnix. I'm not 100% sure about silver, but definitely gold. So the other trade opportunity, so it's Monero's one opportunity. The second opportunity I'd say for today would actually be gold. As per these charts being next to each other like that, you'd be looking at gold and expecting that gold is maybe going to play catch up over here. So what would a trade look like? It would look, if you had to just enter into a runaway market over here, stop losses over there, and you can target a little bit of a fib extension. We'll target maybe like a 1.618. I just want to get it pretty precise over here. So let's throw that on and let's go to, there we go, a 1.618 fib extension. Takes this over there and we can put it back like that. There you go. So you can see it nicely. So I'd be looking at something like that on gold, if this is going to follow suit and do the same thing that silver's just done. 2.13 to 1 risk to reward ratio. You're trading this up for about 11.36% move, which means you don't necessarily have to use a lot of leverage, but there's your 1.618. So you're trading up over there. Any little pullback, if you get that over here, and hopefully this becomes a slingshot up. Alrighty. Another thing I'll look at is Monad, because I know that it's new and there's questions around it. So Monad. Okay, Monad, let us go to... All right, let's go to Bybit. Maybe they listed pretty quick. We'll see over there what it looks like. Nah, look, it's listed like yesterday. That's the problem. So what I'll do is I'll rather just go through to CoinGecko. Oh, there it is. It's already somewhere at the top here. Okay, so it has got a nice little move, probably because of the Bybit listing, which just happened looks like 2 days ago, but as per the price history. But all of this is going to be underside resistance. We can go into the trading view version on their platform over here, and you can imagine that this is a pretty key level to reclaim, right? You can see previous little consolidation that led to that upside move, close to that support, resistance. Is that going to be resistance again? I don't know. If it gets above there, maybe then you can talk about some further upside. Yes, you're probably breaking that downtrend, so that's decent over there, but very, very little price history over here. So when you don't have much price history, you're playing with fire, right? It's dangerous trades. So just be careful over there. Cool. All right, guys, smash the like button if you haven't already. Let's check on your polls here. So we got 36% of you believe 95K comes first. In terms of a weekly close, it's not which level gets touched first. It is where is the weekly close, right? That's what you're going to be looking for over there. So weekly close below 75K, 42% of you. If you want my thoughts, I would probably say higher chance of a weekly close above 95K. But I think that if price breaks down, you'll go down to 75, but you won't close below there. You'll get demand that will come in, price will spike up, and then you'll probably go and close at about 95K. I do think in the future, you'll still see 100, 105K Bitcoin potentially, and that's going to be your next major lower high. But this can take time, right? This can take possibly months to play out. So you need to be aware of that. Alrighty. Cool, guys. That is it from me. Thank you so much for joining. I do appreciate each and every single one of you. I will see you all on the next one. You have the trades. You know what to do. Thank you so much for joining, and we'll catch you tomorrow. Cheers for now.